Hello, today is Sunday, June 28, 2026. Here is your daily signal. According to Fortune, the aftermath of the Iran war continues to reverberate through U.S. oil and household markets, with crude oil prices bouncing back to pre-war levels, but gasoline costs for everyday consumers remain stubbornly high. This spike is rooted in disruptions to vital Middle East oil supply routes since June 2026, when the conflict escalated, a serious concern given that the United States relies on the Persian Gulf for roughly 7% of its crude oil needs, as the U.S. Energy Information Administration highlights. Major oil players including ExxonMobil and Chevron have ramped up security across regional facilities, and the U.S. Department of Energy is closely monitoring both reserves and domestic pricing, while OPEC, guided by Saudi Arabia, has taken a central role in adjusting global supply to manage risk. Just this past week, Reuters reported that U.S. crude futures rose 5% to settle at $93 a barrel after new missile threats emerged in the Strait of Hormuz, while CNBC noted average U.S. gasoline prices climbed 12 cents, hitting $4.29 per gallon. For American households, this means rising transportation and utility costs now and, if these trends persist, potentially higher inflation down the road, which could force the Federal Reserve's hand on interest rates. Meanwhile, a drawn-out crisis in the Persian Gulf could push U.S. energy policy toward even greater diversification and boost domestic production efforts. Next, let's turn to the electric vehicle surge in the wake of the Iran crisis. Fortune reports that the war's impact on oil markets has done more to accelerate electric vehicle adoption than years of climate policy, with major automakers and governments now shifting into high gear. This new momentum is rooted in severe oil supply disruptions from the conflict, which have motivated the EU, China, and the United States to ramp up renewables and EV incentives as national security priorities since mid-2026. Major automakers such as Tesla, BYD, Volkswagen, and General Motors are all fast-tracking battery investments and expanding fast-charging infrastructure. Meanwhile, critical mineral suppliers like CATL and Albemarle are racing to shore up supply chains. According to Reuters, Tesla is responding to this demand with plans to boost EV production capacity by 30% by 2027, while Bloomberg notes BYD's EV sales jumped an impressive 45% in June. The Financial Times adds that Europe is rolling out an emergency $40 billion fund to accelerate battery innovation and charging network expansion. The immediate effect: EV adoption rates in the EU and Asia-Pacific now look set to hit 55% of new car sales by late 2027, and global oil demand could fall by as much as 2 million barrels a day. But with this rapid growth come new strains. Supply bottlenecks for lithium and cobalt are likely, and global governments are racing to expand fast-charging networks and encourage innovation, potentially alleviating consumer range anxiety and solidifying the EV shift. Shifting gears, the world of robotics and artificial intelligence is seeing a profound transformation, with TechCrunch spotlighting how companies like General Intuition are betting billions that gameplay-based AI can train robots to handle the unpredictable real world nearly as well as humans. These models use complex simulated environments like Fortnite or action games to help robots develop advanced decision-making and sensory skills, an approach that builds on breakthroughs made by projects such as OpenAI's Dota 2 bots and Google's AlphaGo. Industry leaders including OpenAI, Google DeepMind, Boston Dynamics, NVIDIA, and research institutions like MIT are at the forefront, with experts like Demis Hassabis, Greg Brockman, and Rhea Hatzel pioneering this movement. Notably, MIT researchers have just demonstrated that robots trained on video game data improved industrial assembly efficiency by 17%, and NVIDIA announced a powerful new toolkit harnessing video game physics for robotic training. In the near term, manufacturers may adopt these game-trained AI models to speed up production and reduce factory errors, while medium-term, logistics, healthcare, and autonomous vehicles stand to benefit as robots become more adaptable and capable. As these capabilities grow more sophisticated, however, ethical questions around AI autonomy, safety, and transparency are gaining urgency, with closer partnerships expected between academia and industry to shape responsible real-world deployment. Now, onto the markets. International markets were broadly lower, with Germany's EWG losing about 1% and France's EWQ down by 0.7%. The UK and Italy also saw declines, while India's INDA edged up slightly. Chile's ECH rose over 0.6% today, reversing some recent declines. In commodities, gold advanced by 1.1% and silver outperformed with a 1.8% jump, but oil USO retreated sharply by 3.5%. Platinum gained nearly 2%, while carbon and lithium both fell, lithium dropping more than 3% on the session. In U.S. sectors, the S&P 500 slipped 0.7% and semiconductors under stocks sank 5.6%. Healthcare led with a 3% rise, and real estate gained 1.5%. Among leading stocks, Microsoft MSFT surged 5.7%, Adobe rallied nearly 5%, and Amazon posted a gain of 2.5%, while Nvidia declined more than 1.6%. Marvel dropped over 5% and Oracle slid 2.6% on the day. That's it for today. You can find more news and details on our website. Goodbye.